We're back. Let's get to Frank Holland now, who has today's ETF Edge. Frankie.
Hey, Scott, what's going on? You know, tech's the start today, but consumer discretionary is not far behind. The sector was the S&P's biggest gainer last month, with the 5 largest consumer discretionary ETFs up pretty big from their March lows. The iBuy ETF up more than 3% today, for example. Of course, many of these funds have huge positions in Amazon, which is also near records. Right now, I'm joined by Jay Jacobs, the head of research and strategy at Global X, and Todd Rosenbluth, senior director of ETF and mutual fund research at CFRA. Jay, we're going to kick things off with you. Your thoughts on consumer discretionary and how to use ETFs to invest going forward when you're looking at names like L Brands, D.R. Horton, and Whirlpool as the other drivers of this sector last month?
This is one of the sectors that has been most upheaved by COVID-19. Obviously, as people have stayed at home, they haven't been able to go out and go shopping at some of these traditional brick and mortar stores. But beyond that, you see massive changes in consumer habits. People are shopping online for things that they never bought online before, like groceries or even vehicles. And people are changing what they spend money on. They're no longer buying suits and button-down shirts. They're buying leisure wear to wear at home as they work from home. So things are changing very quickly. And I think we're going to continue to see a lot of disruption in the space. We've seen 23 retail bankruptcies this year so far. And we've seen e-commerce names far outperform the brick and mortar names so far. So we're very bullish on the subsector of internet retail.
Jay, to your point, you mentioned the eBiz ETFs, one of your picks. Wayfair, one of the top holdings there, obviously having a great run since the pandemic began. Todd, we're going to switch things over to you. Your take on these moves and the long-term growth of consumer discretionary with the reopening happening really in starts and stops. Can ETFs be a safe place to put your money to capitalize on all this?
Well, it depends what kind of ETF you're buying. So an ETF like FDIS, which is Fidelity's consumer discretionary ETF, has a 35% weighting in Amazon. So you really want to make sure you look inside the portfolio, make sure you're getting the diversification. An equally weighted version of the S&P 500 consumer discretionary ETF, RCD, which is an Invesco ETF, it significantly lagged behind. It has an equal weighting in those L Brands, Whirlpool, PulteGroup names you talked about, as much as it has in Amazon. The downside is it also has roughly the same amount of exposure to Under Armour and Carnival, which is what's weighing it down. You can go more thematic and narrow and focus. The Home Builders ETF, XHB, the Spider Home Builders ETF, is a good way of playing some of those home building companies as well as Whirlpool. But again, you've got to make sure you understand what's inside the portfolio.
Todd, thank you very much there. I think you also mentioned the iBuy ETF with big stakes in Peloton and Carvana, 2 stocks that kind of depend on us changing the way we buy things and the way we spend our money going forward. Gentlemen, thank you both for joining us. And for more, please don't go away. Our live show starts at 1 p.m. Eastern Time on etfedge.cnbc.com. We're going to talk the top pandemic trades, navigating U.S.-China tensions, using ETFs, and much, much more. Don't miss it. Scott, now back over to you.